Whoo, no sleep, gang. We're going to talk about Wix.com. Just reported some earnings this morning, as you see, up 10% as a result. So let's take a look at these earnings and see what is going on for them. Obviously, Wix is one company that you might have assumed seek to benefit from our current environment that we're in. As a cloud-based web development service, they definitely seek to benefit because more people should be seeing more demand on their platform. So you see Wix posted a non-GAAP EPS of negative 1 cent, beat by 1 cent, so boring on that aspect, but a GAAP EPS of negative 76 cents. So one thing that I think is fun about doing all these earnings, look into some of these companies' earnings, is that you find that a lot more of these big tech companies that you don't necessarily think about, they don't make money at all. They lose money hand over fist. You don't think about that until you start looking at some of these companies' earnings, just to see how much they lose. So that's not a good number there, that GAAP EPS line. But they also posted a inline revenue of $216 million, which beat by 23.9%. Pretty good. There was an increase 23.9% year over year, I should say. Wix rides the coronavirus tailwind into a quarter one EPS beat. Debatable. I don't think that's accurate. They didn't beat anything, but net premium subscriptions ads grew 207% in April. And Wix says the quarter two guidance is well ahead of what they originally expected, because you're going to see more of an impact in the next quarter than you would in the first quarter. So total collections grew 24% year over year. Wix added 3.2 million new registered users, up 63% year over year for a new monthly high. Pretty big. And for quarter two, Wix sees revenue of $231 million to $233 million versus a consensus of $227.22. Not all that big, actually, all things considered, over the consensus. That's not a massive difference there versus the consensus for this thing to be up 10%, and free cash flow of $41 to $43 million. Let's look at this press release and see what they have going on. April 2020 demonstrated significant momentum across the platform, of course. Accelerating new subscription generated from existing cohorts. Good for them. They increased marketing investment in user cohort acquisition due to thriving demand and to generate further growth. Initiated a quarter two outlook growth for revenue and collections. Cool for them. Expecting 28 to 30% year-over-year growth for quarter two. And obviously solid quarter one results, as they mentioned here. So the demand is accelerating. No shocker. Very cool for them. Despite what we observed in the early stages of the crisis, cohort cancellation trends have reversed, and people are now adding instead of reversing. So long-standing freemium model. It's just showing how great that their freemium model is. I hate saying that, but our users are moving commerce online more rapidly than in the past. As net new Wix store subscriptions grew 580%, and net new Wix restaurant subscriptions grew 167%. As more commerce moves online, businesses also need solutions to communicate and market online. New purchases of Ascend by Wix grew 136% in April. So all these April numbers are just staggering. Just staggering number. Wix payments grew 66%. Wix payments growth also accelerated as new Wix payments merchants increased 123%. So general merchandising volume grew 66% as well. But just massive stuff for what's going on right now for them. So this next quarter should be massive. It's weird to see their guidance isn't that much higher than consensus. But, I mean, maybe they have a reason for it. So we saw that total revenue number, we saw the subscription number, but creative subscription recurring revenue is $739.5 million in the first quarter compared to $621 million in the first quarter of last year, increasing 19% year over year, and that's because all those new subscribers that they brought on, and it's only going to really increase from there. So total gross margin was 71% compared to 77% in the first quarter of last year. Nothing major there as far as that's concerned. Margin should be high on this company, so non-GAAP net loss was $0.4 million. Nothing massive there compared to a non-GAAP net income of $1.5 million in 2019. So they did lose more money this year. GAAP net loss was $39.2 million compared to $30.7 million last year. So they definitely lost quite a bit more money. I mean, nearly $10 million more in terms of that. So that's a concern you could see for the company. I don't know. For me, it's crazy to think about how many of these companies just don't actually bring in any profit. It's scary to think about how many companies are taking net loss and that they're still just doing fine. It's going through investments. I try not to invest in too many of those types of companies that aren't actually bringing in a positive EPS number. So, but they added 6.9 registered users in the first quarter. Good stuff. They launched Wix Arena as the Wix marketplace, a place where partners can offer their services to Wix users who need help creating, optimizing, or marketing their websites. Pretty cool. The Wix education team created a learning site with at-home family activities in order to provide more fun and creative opportunities for kids and parents to learn how to create and grow a website. Cool for them. They integrated Zoom with Wix bookings, Wix stores, and Wix events to help businesses bring their appointments and services online. Pretty cool. They built and launched an online volunteer call center on Corvid by Wix to connect governments to citizens that need support. Pretty cool. Its outlook isn't necessarily as exciting as I would have anticipated it being. I would have expected a little bit more in terms of guidance for them. And I think it'll be important now. We'll look at that balance sheet and call it a day. So we're looking on the right-hand column. So overall, your total current assets, rose around 20 million. I do believe this is in thousands. So $20 million more, 784 million in total assets right now. Current assets, I should say. Total assets in general of 1.16 billion. Good improvement there. Around 60 more million dollars. I'll take that 60 million personally. But then you see a total current liabilities number also increased around 50 million, 496 million total current liabilities, and total liabilities in general, that's right, of 953 million. So it leaves stockholder equity at 210 million. Not the most exciting thing ever. If you consider the company taking, net losses of the 30 million range, close to 40 million. Obviously, they have the ability to survive quite a while, but the balance sheet's not as beautiful as you might expect from big tech with such good profit margins. You would expect a little bit better of a balance sheet, and this balance sheet is somewhat disappointing to me. So where you find value in this company it's hard to say. I mean, currently trading in a market cap of 9.4 billion, but annualized revenue of close to 1 billion. I mean, we're talking about 9 times the amount of their average annual revenue in terms of what they're trading at is pretty absurd. And if you speak to it, I completely understand. You could say that it's because of the current model going on right now that it only seeks to benefit them. But if you look, really historically for this company, they were down in the 80 range, which is a lot more fair value in my opinion, but they're still at 41% on the year, which is massive growth. And not all of that is 100% due to people's hope about this. I mean, they should see big benefits, but their guidance really wasn't that exciting. 2018 revenue is 630 million only. their guidance wasn't as exciting as I thought it could have been. So I'm not personally going to be investing in this company right now. If you had invested at this company at the levels of $80 a share, I appreciate what you did there because you've doubled your money. But I don't think it's necessarily a good point to get in right now because I don't know how much more wiggle room there is to go up. If the market were to face a bad time, could the stock continue to go up through this? And I doubt it would. So that's my opinion on it. I hope you enjoyed.